Dear colleagues, ladies and gentlemen, hello and welcome to our Refinitiv webinar on steel market situation and prospects. I would ask you to put a plus sign in the Q&A chat box, which you see below in your screen, so that I could just understand that you hear me well. Can you please do that for me? Okay, someone hears me well, but I would prefer to have more answers from the audience. Can you please use the Q&A? Okay, I think you hear me. That's very good because I see your answers in the chat box. That's great. Many of you know that Refinitiv used to host annual offline conferences on steel market. But this year, as you know very well, we are all facing an unprecedented challenge globally, and we all definitely have to change our approaches. So today, Refinitiv hosts its first online steel sector webinar, and I'm really glad that we have a very reputable audience here today, representatives of well-known companies from the industry and from the analytical companies as well around the globe, from Russia, Turkey, from the Middle East, Europe, and Asia. I'm happy to greet the guests who I know personally. Thank you very much for coming. It's really very nice of you. Let me first introduce myself and our speakers just in a couple of words. My name is Ekaterina Garshenina. I've been with Refinitiv for 5 years already and lead a team of analysts who cover iron ore, scrap, and steel products markets. I'm happy to introduce our panel of speakers who are with us today. We are really lucky to have these high-ranking people here and speaking at our event. I hope that you all will take your chance to ask questions during the webinar. First, let me introduce Boris Krasnozhonov, Managing Director, Head of Research at Alpha Bank. Boris has 20 years of equity, commodity, and fixed income research and investor relations experience in Alpha Bank and in such well-known companies as Rusal, NLMK, and others. Ilya Belikov, Head of Marketing, Construction Sector at NLMK. Ilya also skipped board of directors at his company in order to participate in our webinar today. So I'm really grateful you've made it, Ilya, and you are here to speak with us and to share your views at the webinar. Bayar Sadashiv Shetty, General Manager Commercial at Al Ghurair Iron and Steel, Abu Dhabi, United Arab Emirates. Shetty is responsible for the sales and marketing, purchase and logistics, finance, HR, and IT functions of the company. Welcome, Shetty. Viktor Zemlyanych, Head of Marketing Department at Metallo Invest. Viktor has been in iron and steel industry quite for a while, since 1995, and we've known each other for many years since we worked together at Metallo Invest company. Viktor is also a member of 2 committees of World Steel, Economic Committee and Raw Materials Committee. So welcome once again to all of you. You can find more information about our honored speakers in the presenters section of the webinar platform. I will now guide you through the navigation panel, which you can see at your screen. First, what you need to know about the navigation panel is the presenters section, which I already mentioned. I guess it's with an icon showing a group of people on your screen. The second important thing for you is the Q&A chat box, which some of you already used. Please send us your questions through this chat box, and I will address them to the speakers. We'd really love to have this webinar as an interactive thing, and I would look forward to your questions. One only request from me at this side. Please specify the name of the speaker who you want to answer your question. That would be much easier for me to understand who you expect to answer and for the speakers to understand it as well. Then you have the slides section, which is in front of you. We'll have presentations and slides shown there. To your right, most probably, you will see a short questionnaire, which we kindly ask you to fill. You can do that at any moment of our webinar, and we'd really love to have your feedback. The questionnaire is short, and it won't take much of your time and effort during the webinar. We will have 2 presentations today and a panel discussion in the end with all our 4 speakers afterwards. Now let me pass the floor. To Boris, who will be our first presenter and will tell us what will drive steel sector recovery from COVID-19. The floor is yours, Boris.
Thank you very much, Ekaterina. Thank you.
Boris, sorry, I think you'd better unmute yourself once again, if you can, please.
Unmute, okay.
Yeah, now we hear you well, thank you.
Okay, okay.
Just a small remark. Sorry, yes, we hear you well. Just a small remark to the audience. For your convenience, you can expand the live view box where you see the slides. Just expand it and you will see the slides better. Thank you, Boris. Please go ahead.
Yes, and Ekaterina, if you could help me to put the slide back on the screen because it disappeared for some reason.
Here it is. Do you see it?
No, unfortunately, but I have a presentation in printed format. So if you could help me. Not sure why.
I think the audience should see the slide because I see the first slide of your presentation, what will drive steel sector recovery from COVID-19.
Okay. And if I click, do you see the next slide, disclaimer at the moment?
Try to do it right now. No, it doesn't change.
No, unfortunately, for some reason, the interface with slides disappeared. I'm not sure why.
I can change it for you.
Yes, if you can, yeah.
Now, do you see the next slide, which is disclaimer of Alpha Bank?
Unfortunately, I see the slides in a very small format at the top line of the interface. So before I seen it like a presentation style.
I see. Boris, just for you and maybe for the other participants, if you look at the bottom part of your screen, you see some menus there. Live view. If you see live view on my screen, it's to the left. Click live view, and you will see the slide. Do you see it right now?
Yeah. Yes. Yeah. So we can start. Yeah.
Yeah.
Okay. So thank you. Yeah, thank you very much, Ekaterina. So sorry for minor delay, some technical issues. So it's a new format.
It's okay. New format, new challenge, new virtual life. It's okay for everyone.
Okay. But thank you very much one more time for the opportunity to present at the Refinitiv webinar. It's great to hear my colleagues, and thank you very much, audience, for joining us. I think it's going to be quite interesting discussion today, because definitely the market, the steel market, ferrous and carbon sector, going through very unusual times this day, and probably we are facing the level of uncertainty due to coronavirus outbreak and all the changes in the economy that we never faced, I don't know, at least in my career for sure, and probably as like my colleagues with long experience saying, even going back to 60s, 70s, they never seen something like that. So what I'll try to focus on my presentation to identify maybe some bigger trends, some ideas, some questions most crucial I see at the moment We hear from clients, we hear from consultancies, and we have definitely a great platform to discuss what's happening at the moment. Some focus will be on China, definitely. It's inevitable because China is more than 50% of the steel market. So let's start with China, and definitely we'll have to analyze what happened over the last several months since the beginning of the year. And statistics and facts are crucial here. So going to China. It's an interesting fact. It's maybe disputable, but it's a fact that China's steel production continued to increase during the peak of coronavirus pandemic in the first quarter of this year. You see the chart on the slide. I also go to the slide. And basically the Chinese steel production in April got back to the pre-COVID level. Also, it's been many talks about steel inventories, particularly they've been strongly up in China, going back to February. And February is obviously the unique month for China. It's Chinese Lunar New Year. Also, the credit system in China is working in a manner that nearly 75% of credit in China allocated in the first quarter. And in the first quarter, particularly around the Chinese New Year, they see the traditional restocking. And that's the case. And you see again on the chart that yes, Chinese inventories, steel inventories, been strongly up in the end of February. But again, the levels we've seen, they're probably higher than several previous years, but they're comparable with number of years, 2013, 2014. So it was nothing extreme. And now we go to the period of destocking in China, what happens on regular basis every year, and not only in the steel sector. So all in all, key steel production and supply chains, that's my conclusion, were not significantly disrupted by the pandemic in China. And pandemic started from January 20th, and the official end was March 10th, again in China. So how China secures global steel demand, and basically from where the Chinese steel demand growth coming. We have three basic areas. Going back to last year, Chinese steel production nearly touched 1 billion tons. The country's share of crude steel production was more than 50%, 53%. First of all, it's domestic consumption. Yes, you see the details of the Chinese 13th five-year plan. It's totally $1.8 trillion been committed to 11,000 listed projects. So it's a really huge investment. It's a huge fixed asset investments, and they've been driving domestic demand in China. If we go to the next slide, we see quite a big parameter of the Chinese economic strategy. It's a Western development strategy. We know that the Chinese steel consumption is above 600 kilos per capita at the moment. But in some areas, if we talk about developed regions, like Beijing, Shanghai, Tianjin, it's above 1,000 kilos per capita. If we go to Chinese provinces with lower living standards, poorer provinces, mostly in the west of the country, consumption there can be less than 200 kilos of steel per capita. So there is a huge disparity. And 65% of steel production basically are in coastal provinces. You see the map demonstrating, and even you see, if you look at the railway system, so it's all concentrated in the coastal line and mostly southeastern provinces of China. While the west is fairly light. So going from here, and Chinese government definitely interested in developing steel consumption in western provinces and central provinces. Going to the next slide, it's another huge driver for steel consumption that China generates. It's either how it's called BRI, Belt and Road Initiative, or One Belt and Road Initiative. But it's a really huge program launched by China. And it's very metal intensive, very much steel intensive. So 65 countries involved at the moment in this initiative. Different estimates in terms of what capex commitments total, varying from 2 trillion to 5 trillion over this decade, US dollars. But for sure, it involves very different projects. There is an inland route, maritime route. But if you look at the presentation, at the pie charts, you see the interesting breakdown by regions. So it's not concentrated only in Asia. It's very important to mention. You see that the Central and Eastern Europe project and by project investment value represent nearly 1/3 of total investments under One Belt, One Road initiative. Also, in terms of breakdown by sector, it's also very diversified at power, railway, everything. So all in all, that's going, and these estimates are coming from BHP, basically the largest supplier of iron ore, so very reputable in-house analyst team. They have everything in details on their website. So that's the reality. One Belt, One Road initiative exists, and definitely significant skill volumes go to these projects. Also worth mentioning that in countries involved in the Belt and Road initiative, it's on the next slide. If we talk about Iran, Pakistan, Sri Lanka, the steel consumption per capita is very low. You see on the map, it's at maximum 200 kilos per capita. Sometimes it's below 100 kilos per capita. So basically, BRI participating economies face steel shortages. And China clearly targets shifting low-tech industries, so for using this term, but that's how China considering the steel sector, iron ore sector, ferrous and carbon. For them, it's upstream. So they want to move these sectors abroad to BRI participating economies and to Western provinces. So they want basically steel mills to be located there. It's not my guess, it's you see the comment of Prime Minister of China on the slide, Li Qiang, at the ASEAN conference in 2014, actually 7 years ago, where he said that we encourage competitive Chinese producers of iron and steel, cement and plate glass to shift the operation to ASEAN countries to meet the local need of infrastructure development. So basically, it's a quite long-lasting strategy. Again, briefly on the next slide, you see that the share in China's exports of merchandise and infrastructure-related products is growing. It's growing for many years. You see how important for Chinese exports becoming Vietnam, Pakistan, Kenya. So the growth is several times over last 2 decades. So China basically supplying steel infrastructure-related products to BRI economies, and the process intensifies. Okay, what about the rest of the world? On the next slide. Unfortunately, we have to recognize that world's crude steel production down 13% in April 2020 on year-on-year basis. European and US steel output down 23% and 33% respectively year-on-year in April. India reported just enormous 62% drop in steel output. Japan and Turkey also demonstrate a strong downturn. Russia is not an exclusion here at all, at least on preliminary data from World Steel. Russian steel production decreased 23% in April. You see the charts, they're probably self-explanatory. We should mention one sector, let's say upstream end of the value chain, and the ferrous and carbon sector, iron ore. It's very interesting dynamics. Iron ore prices move up while steel prices basically move south, go down. why it's happening. Despite numerous forecasts that iron ore prices should crash to $70 a ton, $50 a ton on CFR basis, spot prices, seaborne prices. At the moment, seaborne spot prices flirting around $100 a ton. We know that China consumes 80% roughly of global seaborne iron ore. China iron ore imports in April been up 20% year on year. So the breakdown of major supplies is clear. Australia, Brazil supply 60% and 20% respectively. So they're covering around 80% of the Chinese needs in iron ore. Interesting fact, I put it in the presentation, but that for China, on daily basis, iron ore imports at current prices, so they're importing roughly 3 million tons a day, is comparable with their oil imports, which are at peak at the moment. So money-wise, it's around $350 million a day. We'll stop probably during our discussion later on scrap situation. But yes, increased competition from scrap is inevitable, and that's a huge argument from basically people who are bearish on iron ore. But my view, it's not now, because it's not. I'm not sure if it's possible on short-term horizon to replace blast furnaces and basically BF, BOF method in China with electric arc furnaces. But we'll discuss it later. But still, interesting thing is you see on the chart that steel prices weaken ex-China on sluggish demand, and Chinese domestic steel prices, they start to recover. You see the difference between HRC dynamics in different regions. On the next slide, we'll stop on Russia. So what's happening in Russia? Definitely the economic situation is challenging, and I would say trends not very positive, even quite negative. The residential housing volumes down 36% in April, minus 10% year to date. Russian Railways just announced a cut of maintenance capex by 38%. Not clear what's going to happen with metal-intensive national projects. They can be delayed due to COVID. I know the government presented a new national economic program, but still we probably miss some details. We need more information to estimate it, how metal-intensive it is and how it's going to help to consumption. But Russia was on track to consume approximately 60% of produced steel in this year and next year, based on pre-COVID-19 forecasts. The demand could be growing around 1%. A very, let's say, conservative scenario, it could grow up to 2-3% if national project going to be implemented. But reality is obviously it's going to be a huge drag down on demand for sure in the second quarter. Probably our colleagues from the corporates going to share a view what they see in terms of local demand at the moment, how fast it's going to recover, what's happening at the moment. But we are picking up information from the market and from metal traders that at the moment Russian steel majors offer significant discounts in terms of domestic steel prices. You see on the chart our estimates. That's what we picked up on the market in terms of May contracts. Russian steel mills and the Russian steel sector, pros and cons, what strengths, what weaknesses the Russian steel majors got in the current situation. Obviously, Russian steel majors demonstrate close to 100% integration into iron ore, at least if we talk about, or 100% or more, if we talk about MLMK, Severstal, Evraz. So efficient upstream integration, it secures cost leadership. It's a must. So, but Russian steel majors also claim ability during all recent conference calls with analysts, investors. They claim ability to redirect volumes from European and CIS markets from the domestic market to Asia. We obviously see a number of potential headwinds in general for the Russian steel majors and for export volumes. First of all, many Russian steel producers just got lack of expertise and customer base in Asia. That's number one. Yeah, it's here on the slide. Number two, demand for low value-added products mostly exists. It's pig iron, slabs, billets, at maximum HRC. But it's quite difficult to sell high value-added products. Another headwind, and it's potential new trade barriers. That's we heard already about potential increase of import duties in Europe for flat products. We heard about Eurofair claims to the government to cut the European steel import quotas for flat steel. So basically, all trade barriers on the horizon. And definitely the Russian steel majors, if they're going to redirect volumes to Asia, are going to face competition from Chinese and local mills. Yes, you see on the chart here that Russian companies, they probably on HRC basis, they got an advantage on the cash cost base around $150, $170 compared to international peers. But we shouldn't forget, and we should be honest here, that China locks customers securing financing for infrastructure projects. It's not only the case of China. It's not China that bad guy, in my view, in the sector. The same, it's quite difficult and before been selling steel in the US, for example, where technically labor unions push local customers to buy steel from local producers, and in many other countries. So that's the reality, and that's the competition. Because not only steel, but also financing is necessary for big infrastructure projects. So we go to conclusions. That probably not even conclusions, because confidence is, in my view, in the current uncertain situation is not the great thing for analysts. So basically, the idea is to identify big trends and try to find the general direction of where we go from here. But several probably ideas, at least we can discuss. Definitely China navigated through COVID pandemic, avoiding material damage for the ferrous and carbon sector, and my view for real sector in general. China secures steel production and consumption growth through domestic consumption, Western development strategy, and Belt and Road Initiative. Huge points for discussion, because in my view, that's what's going to drive steel demand in the future. Also, we should say that China is short of iron ore. Iron ore is a commodity of strategic importance for China, and it's second biggest commodity market after oil. So understanding of the situation in the iron ore sector is crucial for understanding where we are going to see the steel prices and how we are going to see the market in general. Steel consumption and production definitely crashed ex-China. The pace of recovery, it depends, and it may be slower than probably market pricing at the moment. I'm not sure about V-shaped recovery. But again, fixed asset investment, in my view, will drive steel demand. Yes, the steel is used in the automotive sector and some other segment. Yes, there are some innovative applications of steel. But basic infrastructure, fixed asset investments, it's still a key driver. Yes, Russian steel majors, as I said, that they demonstrate cost leadership, but a number of strong headwinds in terms of redirecting volumes to Asia we see on the horizon. And definitely, for Russia, domestic demand is a key driver, and the future of fixed asset investments in Russia, and under nationwide economic recovery plan and timing of full virus lockdown lifting in Russia, that's probably key parameters we should understand to see the future of the steel sector. Here I would conclude my presentation. If you have any questions, and depending on the moderator, we can discuss now or go into Q&A session. Thank you very much.
Boris, thank you very much for your presentation and your views on the situation. It was really interesting indeed, and for me there were several very interesting topics covered in your presentation. I paid attention to your comprehensive review of Belt and Road Initiative and its effect on steel industry recovery. As for questions, I think we'll get back to them after the second presentation during our panel discussion. And here I would like to remind our audience of two things. The first one is please put your questions into the Q&A section. You can do it right now. The second thing is please don't forget about our short questionnaire. As I said in the beginning, you can fill it in at any moment of the webinar. Now let me pass the floor to Ilya, who will make a presentation on construction sector and steel consumption in Russia during pandemic of COVID-19. Ilya, the floor is yours. Please go ahead.
Thank you. Thank you, Katya. Hello, colleagues. Hope you can hear me well. So I would suggest to pay attention to situation in Russia. And I would like to start from macroeconomics, situation with macroeconomic in Russia. We started very well in this year, and we see it from steel consumption perspective as well. I'll show it later on. So you can see that in the beginning of the 2020, before COVID-19 pandemic, economy of Russia started the year with grow by 1.8%, and since then, when at the end of the March, our president claimed self-isolation and a period for our country, so situation started to worsen, and at NLMK, I'll pass to the slide number 21. So we started to measure and to ask our clients what they feel, what they see about the future, and started to on weekly basis to ask our clients share their view on the situation on the market with us. And you can see here that we started from the beginning of April. I put data from 17th of April, and you can see here that distributors were more worried about market situation at the beginning. Most of them put their mood on the yellow zone. So what does it mean? The yellow zone means that they continued to work. They continued to their ordinary operations, but the expectations are not very good. So they expected and they expect that situation will worsen in the future. So red mood, red zone means that company ceased operations, they stopped. Orange column means that company expect stop operations in the near future, and green zone means that company see very good perspective with the demand. They don't expect any problems in the future, and they expect to continue their ordinary operations. So you can see that during April, so situation, when we start to measure and to measure this situation, we saw that our clients, our customers were very worried about the future, about the prospects of future, and we see a lot of yellow, and from construction sector, for example, from developers, from EPCM constructors, we saw about 20% of them ceased, almost completely ceased their operations and didn't expect any positive change in the future. So why this happened? Because in Moscow region, all construction activity and was completely stopped by our mayor Sergei Sobyanin, and this picture shows mostly expectations of developers in Moscow region. So all other regions continued the operations more or less. That's why about half of our customers are in green zone. So since then, the situation started to improve, and by the end of May, we see that more than 80% of our customers are in the green zone. So they expect that their sales will improve. So they see that their sales improve at the moment, and the situation is going to be better. That's why they start to feel better and to put the expectation on the green zone. And I would add to that we see it that demand for steel and for rebar, for example, seriously improved at the end of May, and at the beginning of June we see that demand is almost on the same level as before COVID-19 during, for example, in 2019 demand. What about rebar consumption? We saw interesting thing. In July 2019, Tula Steel started operations. They use a basic oxygen furnace as a source of crude steel, and since then we see that share of BOF steel in rebar production and rebar consumption started to grow, and as well we see that this situation started to the share of BOF steel started to continue to grow in the second quarter of 2020 because of lack of scrap. So scrap availability seriously decreased during second quarter because about half of scrap sourced from individuals, and during to self-isolation situation, most of individuals started to sit at homes, and that's why collection of scrap decreased. From the other hand, BOF steel requires iron ore and coking coal. These producers were claimed as and continue the operations because they have they part of supply chain, and government in the regions allow them to continue operations. That's why supply of iron ore and coking coal was stable during second quarter, and for basic oxygen furnaces producers or integrated was for them the situation were more comfortable. But at the moment situation is well improved, and we see very good perspective and hope. I think it would be better to say we hope for better perspective for the third quarter. We see seasonal increase of demand due to seasonal factor, and that's why we expect that we hope that in the third quarter demand will be on the same level, almost on the same level as as in 2019. For hot rolled coil, the situation is the same. So we started with the huge increase in demand year on year. We see 16% on year basis, but of course we don't see final figures for the second quarter, but we think that demand will decrease by two-digit number in the second quarter and expect that in the third quarter it could improve. But of course it will depend on the on our government and the measures of support they add to economy. So we see some positive signs, some positive information from our authorities, and we hope that these input into economy they want to add. We hear about 5 trillion rubles that could be invested into Russian economy during 2-year period. We hope that this will help to maintain or to maintain first of all steel consumption at the same level, or maybe drop steel consumption would not be that much as we saw during the second quarter of 2020, during the peak of pandemic COVID-19. So I'm finished. If you have some questions, please feel free to ask me. Can you hear me?
Sorry, you hear me, Ilya? Thank you very much. Thank you. I'm really very glad that you could make the presentation, although just now, as I know, you had a blackout, electricity blackout at your home. So another challenge of our virtual life in the pandemic times, but still we could hear your presentation, see the slides. That's really great. Thank you very much. I see that questions are coming from the audience through the Q&A box. We'll get back to them in the panel discussion just several minutes later. But one of them I will answer right now, whether the presentations and the recording will be distributed afterwards. Yes, the materials will be distributed after the webinar. And besides, we are recording the webinar, the whole of our today's event, and the recording will be distributed as well. Before we dive into the panel session with all our speakers, let me entertain you a bit. We have a short interactive voting prepared for our guests. Just a couple of questions on your expectations regarding steel market and trends. I would appreciate if you could take part in that, just for us to understand what our mutual expectations for the future are. So you already see the first question on your screens. Please feel free to choose one variant which you feel is most probable in your view, of course. Okay, thank you. We see that most people, sorry, can we just stop on the results a bit? Just wait a second. I want to see the results. Yeah, okay. So steel prices in the second half of 2020 will increase, we think. So we are kind of optimistic, I would say, 2/3 of the audience at least. Okay, good. Let's now go to the second slide. When will global steel demand hit bottom and start to grow? In the following 2-3 months, by the end of the current year, in the next year, in a few years, the most pessimistic variant, and it has already happened, according to your feel. So please choose the variant which you think is most appropriate, just your feelings. Of course, we don't have the magic ball and we don't know the future. We can just feel and guess. Let's guess together. Okay, so global steel demand hits bottom and starts to grow. When? Quite soon, in the following 2-3 months, or by the end of the year, the next year, in a few years, or it has already happened. So I think everybody already chose his variant. Let us try to see the results. Yeah, according to what I see, most of you, almost a bit more than 40%, expect that global steel demand will start to grow by the end of this year. Almost 30% are even more optimistic and say it will happen in the next 2-3 months, and 25% think it has already happened. So we are really optimistic in this audience. We have nobody who voted for the next few years. Okay, then let us see the next question. No, it's not the next. Here is the next. Which steel-consuming sector will revive faster, in your view, and will give more support to steel industry? Infrastructure, residential construction, construction of healthcare facilities, oil and gas, machinery, automobile, other. Maybe something else, just the sector which we didn't include in the list. So which steel-consuming sector should we mostly rely on, and should we expect to give more support to steel industry during its recovery? Infrastructure, residential construction, construction of healthcare facilities, oil and gas, machinery, automobile, or something else. So I guess everybody made his or her vote. Let us see the results. Infrastructure, almost 70% voted for infrastructure. Then residential construction and construction of healthcare facilities. Oil and gas, just a tiny little bit of percentage. So we mostly rely on construction, I would say. Yeah, if we don't divide it into residential, healthcare, or infrastructure objects, we put our hopes on the construction and infrastructure sector. Okay, noted. Thank you very much. And we have the final question, which is very short, and I don't think it is complicated. How will the global situation with anti-dumping measures change in the second half of this year? The number of duties will increase, the number of duties will decline, or current restrictions will remain unchanged. I think during the pandemic months, we kind of forgot about anti-dumping measures, which were topic number one in last year, actually, when we talked about China, Trump, trade wars, etc., the European response to this situation. Then we switched our attention to the other questions, to the pandemic situation. And now, in my field, we're going to get back to the trade war situation. So I'm really interested to hear your views. Let's see the results. The number of duties will increase, almost 70% of voters. Current restrictions will remain unchanged, 26%. And almost nobody believes that the number of duties will decline. I think I would stick with the majority here. I would agree with your view that the number of the duties will increase. Anyway, that's very interesting. Thank you very much for your answers. I hope you've enjoyed the vote. Let me just remind you one more time. Please don't forget to fill in the questionnaire which you have on your screens. I'd really appreciate to have your answers. And my advice is not to leave these for the end of the webinar. It's better to answer at some point during our talk, maybe even now if you don't mind. Now let's get to the panel discussion. For us to feel at ease, we've prepared a few slides at our side just to visualize the trends and to have the charts at hand and the numbers at hand while we talk. I will guide you through this very quickly. At the first slide, I will then keep some of the slides at the screen while we will talk. So don't worry if I do that quite quickly right now. So first, some charts on what happened in a number of countries during these months. Russia, the United States, the European countries, Turkey, India, and the United Arab Emirates. The picture is both in terms of the virus spread and the economy fall. And Purchasing Managers Index in the manufacturing sector is quite a good indicator for this. As we can see, it fall dramatically in the graphs and then somewhat improve recently. Now, in slide number 2, we are showing currency fluctuations, which are another force majeure factor for a number of economies, for example, for Russia and for Turkey, as we all know very well. Oil crush is another very important factor, and the economic activity drop, which we all saw, leads to steel demand drop, of course. If we look at steel output, going into the steel industry more deeply, we see global number is down at the left chart, but Chinese production is high, and we already talked about it during the presentations of our speakers. So here we see that China is high and strong, although the pandemic started there, and other countries' steel output is dramatically down. As for prices, they were volatile, and they still are volatile. Iron ore stays high, though, and that's, by the way, another pressure on steel mills in the situation of low steel demand. Here you can see some forecasts, which we publish regularly in our Refinitiv terminal. These are consensus polls when we ask bank analysts about their expectations. By the way, Boris from Alpha Bank participates in our consensus price polls regarding steel products and raw materials every time we publish them. So this is about prices of steel and raw materials, GDP, inflation, oil prices, etc. A real variety of price indicators and bank analysts' views are available. As for iron ore and coal prices, which you see in this slide, I should mention that these are expectations of bank analysts done in the first quarter. It's very important, in the first quarter, so in the first 3 months of the year. Right now, we are preparing the new round of polls, which will be published very soon, by the end of this month in June. And I expect that the numbers will be quite different this time, because bank analysts are strongly expected to change their views because of the changing situation globally and in different countries. And the new polls will definitely reflect what has happened during these 2-3 months. Now let's get to the questions and to the panel discussion. My first question is kind of informal, I would say, and a bit personal. I would really appreciate maybe a short answer on this. I'm really interested to know how the style of work, the working routine of our speakers changed during these months. We all know that steel mills can't just stop operating and sit at homes, but still we are facing the new challenge, new restrictions, and new working conditions. So my question is, how did your companies go through this? Just your personal view on this. Shetty, if you please, can you just start the discussion and give a couple of words on this question?
Yes. Good afternoon, gentlemen. So what's happened is, yes, it's been an unprecedented time in terms of this COVID-19, something which was unimaginable in all these years, when people could expect steel companies to be working off-site, or rather not on their desks. But as you rightly said, Katrina, what's happened is the plants have been continued to run, they've been continued to operate, albeit a little bit of adjustments in terms of their timings. But most of them, I guess, continue to operate at some capacity levels, depending upon their order book situation. Yes, a lot of precautions have to be taken in terms of maintaining social distancing, in terms of sanitizing the workplaces, in terms of monitoring temperatures. So a lot of precautionary work was done. There were, of course, a lot of fears and apprehensions. But I guess up until now things have relaxed quite a bit, at least in the Emirates. And people are allowed to work almost up to 50% capacities. So a lot of us are partially back in office. But the good thing was the way most of the supporting functions adapted to it. I mean, earlier it was unbelievable that a bank would work, without a physical document. But I guess, banks and institutions like insurance, the chamber, and all the supporting functions were quite adaptive, and they ensured that there is no disruption in services. So I guess, it might be a new norm. I mean, what people are talking about now is that going forward, maybe this becomes the new normal.
Yeah, thank you very much, Shetty. Yeah, that's what a lot of people are thinking of, I guess, whether this is the new normal and how the situation will change afterwards. I hope we will have time to get back to this question a bit more deeply in the end of our talk. Now I would like to hear Victor's short answer to the same question. Victor, if you may, how did your company, Metal Invest, go through this? Just personal view on the working routine, on the challenges.
Hello, everybody. Thanks you for question and for presenting at our webinar. As far as I see, those people who can work from home are working from home, and our companies do a lot of things to decide all questions which are arising during this process. Our mills all are working. People on mills and their management do their best to fight with probability of new coronavirus cases inside our company and in the towns and places where our mills are placed, because really our workers live in some towns, and we have to do measures against coronavirus, not only in places where our workers are working, but in transport and so on and so forth. I am not sure that all this will be a new reality and or new normal, because really, to remember, January, February, March, April, May, and June. In any month, we have a new story about coronavirus. January, all OK, February, France, China, March, Italy, Spain, April, United States, May, Great Britain, United States, and now Brazil. So situation is quite unclear, and just now, I guess we are in the middle of the storm, and just now it's unpredictable what will be weather after the end of this storm. So I guess it's a challenge. I agree with Shetty, and everybody is doing his best in manner in which he understood situation, because really a lot of information is unclear or contradictory about this coronavirus, so people are operating as best as they can. Thank you.
Yes, thank you very much. I agree with you that the storm is still here, I don't know whether it's the middle of the storm or somewhere near it, but it's not over in my view. But of course, it's also discussable and an interesting question to talk about. Let me see. We have questions from the audience to both Boris and Ilya. What are your expectations of steel prices for the rest of the year? Both Russian domestic prices and export prices for hot rolled coils. So let's start with Boris, I think, if you can share your expectations. I know that you're preparing the new price forecasts right now. So maybe you can comment at this point.
Okay. In terms of, let me better probably comment on export prices. I would say the HRC price this year, in my view, unlikely to exceed the level of $450, $460 on average through the rest of the year. Maybe it's going to be even slightly under pressure, around 130, 140, 430, 440, sorry. So later on in the 2021, 2022, probably we're going back to more like a normalized average of around $500 a ton. But again, many things depend on price of iron ore and coking coal. But assuming iron ore is around current levels and coking coal, at least as consensus saying, recovers slightly, probably 480, around $500. It's more like a normalized level. But this year, unlikely we are going to see on average something more than 450.
Thank you very much.
On a FOB basis.
Thank you. Ilya, can you now also comment on this question?
To say truth, I would be the most happiest person in the world if I'll have crystal ball and can see the future. But to say truth, there are uncertainties regarding, for example, second wave of pandemic, regarding the speed of investments of our government into economy, and as well a situation in Europe changing in very fast pace. We see that in China there are some new episodes of COVID disease in Wuhan, for example. That's why it's at the moment it's very hard to forecast the situation, and I don't have any ideas on what the situation with prices will be in the future. So it will depend on iron ore prices and situation in Brazil, for example. I see that, for example, prices for coking coal are at a very low level. I never saw such kind of spread between coking coal and iron ore prices in the past, so that's why it's very hard to make a reliable focus for the future. I'm sorry that I didn't answer your question.
I agree with you, Ilya. It's very difficult to predict prices when being in the middle of the storm, as Victor just mentioned. Really difficult to forecast anything in this situation, but still, I think even without giving the exact numbers, the logic of thinking, mentioning some factors, just having an open and clear discussion here with us is still useful for the audience. I hope so, at least. Although this question is to Boris and Ilya. I find it very interesting, and I really would like to address it to the other speakers as well. Victor, if you can add something maybe in this respect, it would be great. About steel prices for the rest of this year, both Russian domestic prices and export prices of hot-rolled coils.
First of all, I am not expert in hot-rolled coils because we are not producing them at all.
True. Let's talk about steel prices in general.
Okay. So about prices, the problem is not in the level of prices. The problem is in the level of money we as steelmakers will get from our steelmaking operations. Prices can go up, but it does not matter then that our money will go up too, because the situation is quite unclear. And as far as I see, it's more probable that excess of steelmaking capacity will be much more than excess of raw material capacities and raw materials inflow. It's very difficult to predict, but as far as I see, much more steel mills are continuing operation than there are demand for steel. So we will not be in position to take money from our customers as industry. And it's very difficult to predict too, but current explosion of coronavirus in Brazil made some probability of problems with Brazilian supply of iron ore to market. I don't know, because it's crazy situation and it's very difficult to say something. But such probability is on the table. I hope it will not be realized, because it will mean a lot of problems with health for Brazilian people. I don't know. But for steel makers, this year will be quite difficult because of prices. And for about one point was spoken by Ilya about scrap and so on. There is statistics that in any big crisis, the consumption of scrap in steel industry is usually going down. So maybe we will see just the same this year too. That's all I can say. Thank you.
Thank you very much for your view. Very interesting. Sheti, do you have something to add on hot-rolled coils? Of course, not in Russia, but globally. Maybe on other steel, just in general. What's your view on the price dynamics till end of this year?
Yes, Ekaterina, we are actually in a very funny situation as far as the pricing is concerned.
We lost your sound. Please try to unmute you again, Sheti. Sheti, can you repeat, please? Because I think you were on mute.
Yeah, can you hear me now?
Yes, I can.
Okay. So I was saying that, okay, we are at a very funny situation as far as the prices are concerned on the hot-rolled coils, because one would expect generally the demand to be at its lowest because of the current economic situation worldwide. But things have become slightly different in the last quarter. If you look at earlier, the whole world, the hot-rolled prices were dictated by what was happening in China. And now China seems to be importing a lot of hot-rolled coils, and the prices seem to be going up suddenly. So, though there is a certain amount of linkage to the iron ore pricing, but I guess there is a stronger demand which is coming in from China and Indonesia and Vietnam. So a lot of flows from the Asian side is going into those markets rather than coming out of it. So definitely for the short term, it looks like the prices are on the rise. We saw prices below 400 levels briefly, but then now it's coming back up again. So I think in the shorter time, till this flows get balanced out, it could be a little strong. But then overall, I don't see so much of demand. As one of the earlier speakers commented, we do have enough capacities which will be far higher than the availability of raw material or anything like that. So there will be pressure, and the greater pressure will be in terms of demand for steel, which will have a pressure always on the pricing. So I guess prices will, in the long run, be stable around these levels, maybe, max about 450 as what we expect it to be in the long run.
Okay, thank you very much. Thank you, very interesting. I wanted to pay your attention once again to two factors which our speakers mentioned. The situation in Brazil, iron ore prices are high, and now we have this coronavirus threat, not even threat, but it's already there in Brazil. Brazil is in the second place after the United States of America in terms of COVID cases. So we should definitely be watching the situation there and how it influences the iron ore market. And the second thing is Asian and Chinese imports of steel, which is indeed very interesting and worth watching. I'm very glad to note that the audience is very active. Thank you all for this. I see your questions and comments which come in regarding the interactive poll, I think. Vyacheslav says China is recovering and it is half of world demand. Construction is the most mobile. This is, I guess, regarding the support which each sector can give to global steel demand. Yes, I see. If you write your question or comment in Russian, I can see it as well. So it's okay. We have a question to all speakers. In your view, how quickly can European steel output recover? I think I will address this question first to Ilya. Maybe in a couple of words, what do you think about Europe? The question is about steel output, but I would ask about steel demand as well, maybe just in general.
We see that the situation in Europe improved. We see that I will say mostly, and I'll speak mostly about the situation in construction sector, as I'm responsible for construction sector. We see the growth of demand for rebar in Europe. During the peak of pandemic, most regions in Europe did not cease construction activity and continued operations. For example, Scandinavia didn't stop any activities, Northern Europe as well, Switzerland, and we saw some stoppages only in southern countries like Spain and Italy, for instance. But this outage or stoppages it was not very prolonged in time, so very short time, and at the moment operations and the demand continue to improve, and we expect that this happens as well due to a seasonal factor. And we hope that in the near future situation will be much better than, for example, it was 2 months or 1 month ago.
Okay, thank you very much. Boris, can you also comment on European steel sector situation, output, demand? Do you expect it to recover quickly?
I would consider European demand probably is not like a regional demand 100% as a European Union. I think it's going to be more on country by country basis. In some countries, we're going probably to see the recovery from when basically, first of all, of course, it depends how the lockdown is going to be lifted across the European Union. I would assume that in Scandinavia, particularly in Sweden, I know that I talked recently to agricultural equipment producers, which are quite metal intensive, based in Sweden, and their operations already, and they've been running business as usual, and the demand for their equipment is growing. So I would assume that in the countries with a lighter impact of COVID, we're going to see better situation. Probably in countries with more industrialized and like in Germany, particularly if demand for autos, for again power equipment, companies like Siemens, ABB gradually recovers. Situation is going to be a bit better. In countries that's been, let's say, if we cannot talk about Turkey, for example, in Turkey, situation is quite challenging. As far as I know, there was a huge weakening of the local currency, lira, and the situation, just economic situation, been bad even before the COVID outbreak, and now it's not good at all. So again, case by case, I think it's not going. We're not going to see like a broad V-shape or like a spoon-shape recovery in Europe. In some countries, situation is going to be better.
Okay, thank you very much. We have a specific question to Shetty. How do you see local Gulf cooperation countries steel industry due to crisis, due to COVID crisis and low oil revenues in this year? Also, the recent duty increase in Saudi Arabia will spill over to the United Arab Emirates as well? That's a question. So I think local situation in the GCC steel sector, COVID and low oil prices are the most serious headwinds. And the duty increase in Saudi Arabia is also a factor. What do you think about the current situation and the prospects in the region, Shetty? Shetty, I can't hear you. Maybe you are on mute.
Hello, can you hear me now?
Yes. Yes,
Okay.
now I can hear you. Okay.
So let me answer this in two parts. As far as the current situation is concerned, as you're aware, the GCC markets are primarily dependent on the oil revenues. Most of their capital expenditure is based on where the oil is. And that definitely took a little bit of a beating sometime in April when the prices went nosediving. But now it looks like the oil market is adjusting, and there seems to be much positive forecast going forward. Now, the major two sectors which drive the, other than oil, is of course construction and tourism. Now, both again have been badly impacted because of various reasons, including the COVID-19. So that's definitely been a major challenge as far as the steel demand is concerned in the GCC and in the Middle East in general. We do expect some kind of a recovery happening with the oil prices, let's say remaining steady at these levels, or maybe going above a certain level, maybe $50 and above. Then things would look like a totally different scenario. Now, there is also increase in the output that, as we see in terms of the oil total output in the region. So overall, it will take some time for the markets to recover. Yes, definitely. At the moment, it looks like a big challenge. How the local governments are going to react to it in terms of their spending into infrastructure, in terms of their healthcare sector. Right now, they have a priority on the healthcare sector, so that's where all their focus is at the moment. But we do expect that there will be, it's a hard landing, so it will take some time for the local markets to recover from here. Definitely sometime during the second half of the year, we will see some kind of improvement happening. Regarding the duty increase, yes, we have seen that announcement by Saudi Arabia. We are not sure it will spill over to the UAE because this is something which they have taken on their own, though you might be aware that there is also an anti-dumping inquiry which has been initiated by the GCC countries, which will be more in terms of applicable to all the members of the GCC rather than specifically to any one country. We don't see it spilling over here, but then as you notice, it's not something which will impact many of the end users. This will impact mostly the traders and the stockists because the end users already have a duty exemption, so therefore the duty hike will not impact them so much as it would a retailer or a stockist or a general consumer of steel.
Thank you very much. Boris, I would like personally to come back to your presentation. As I understand, we should place our hopes, recovery hopes, on the Belt and Road Initiative, which you focused on in a part of your presentation. At least that's where cross-country investment lies and where money will flow. Chinese producers are encouraged to move their facilities outside China to other countries participating in the initiative. The plan overall looks like a powerful driver of global economic recovery. When can we expect recovery of steel demand and prices? We already talked about the prices, but maybe you can just add something to this view, because I would like to talk now about the factors which will support the steel recovery, global steel industry recovery. So Belt and Road is one point. What else, and when can we rely on that?
Okay, Ekaterina, you're absolutely right. And in general, China, it's only, we would say, half of the global steel demand. It's clear that it's a very metal-intensive economy. It's underinvested in terms of steel and steel demand. You see on the map on one of the slides that it's not only one Belt, One Road initiative that goes across 65 countries. Just China itself, the western provinces, they're absolutely underinvested in terms of infrastructure, in terms of railroads, airports, energy infrastructure, everything. If you go to Xinjiang, you see they need a lot of infrastructure investments. Also, it's important to mention that One Belt, One Road inland goes exactly through the western provinces of China, through then going to the border to Pakistan and then to the Persian Gulf. So it's basically, to a certain extent, the development of western provinces of China, it's linked to the One Belt, One Road initiative. So on this front, I would assume everything is going to be quite active, and we are going to see more demand coming from these regions. Demand. Some countries, yes, they're already building their own steel-making complexes. Like Vietnam, a couple of years ago, became a net exporter of hot-rolled coil. But what about the rest of the world? The rest of the world, as in my understanding, also need huge infrastructure upgrade. Many years ago, maybe 10 years ago, I heard estimates from the Academy of Civil Engineering in the US that the upgrade of the US infrastructure needs around $2 trillion of investments. And President Trump mentioned, actually, when he was elected, just $1 trillion package for infrastructure. Sooner or later, it's going to happen. So in my view, also some infrastructure upgrade is going to be in Europe and other emerging market economies like Russia and Saudi Arabia. We're also going to see infrastructure spending Obviously, it depends on a certain extent on the oil price and the gas price level, but hopefully we are going to see recovery in the hydrocarbon sector also. So I would say unlikely we are going to see immediate recovery this year because still concerns still not the situation about COVID. But on 1-2 year horizon, I think the economy is definitely going to get back to massive infrastructure investment, both developed and developing economies, and the demand for steel going to be in place. And I would say new capacities can be in demand, because outside of China, we don't see too much capacity additions.
I see. Thank you. So infrastructure hopes everywhere, in Russia, in the Middle East, in China, in Asia, One Belt, One Road, etc. Victor, I know you have your own view on the new normal in steel industry and the factors to watch. Can you please share with us? Because we are used to look, I would say, eastwards in this respect and have all our eyes on China. China does this, China does that. We are always watching it do something. It's, of course, the largest market player in steel and raw materials. But should we stop following its trends now, or what do you think?
Thank you for the question. My guess is that China will going up in economy and will develop itself, but the influence China has made to international steel market will be going down. This is not concerning iron ore just now. But as you know, China has blocked import of scrap inside and all secondary materials. And just now, China will build in itself. China will build in countries near it in projects of belts and roads. But this will be internal China deal. And just now, one of the questions is what will be with demand for China goods which has come outside China, from Europe, from United States, and so on and so forth. So really, it's difficult to speak about new normal until we don't understand what will be result of this coronavirus epidemic and what will be result of coronavirus influence on people consumption and people behavior. So because of this, just now it's too early to speak about this. If you want to make some hypotheses, no problem, but you can make thousands hypotheses and what will we do with this? So my guess is that just now we have to wait to understand situation with vaccine, with other methods, to understand will people return to their previous way of life and previous habits to consume something, or will we see other reasons? Because it's not problem for a world, huge problem or deadly problem, to survive 2 or 3 months. But in case, for example, people will be scared to travel for years, it will change situation for cars, for planes, and so on and so forth. And just now, I don't know who can calculate or who can really estimate what it will be. So just now, it's not time to make long time forecasts for this. Because, for example, some countries are investing inside them, for example, China. Other countries or European community, for example, is calculating how much and with what conditions to invest or to take money from market. So just now, my guess is that it's too early to speak about new normal because we don't understand what will be new life. Thank you.
Thank you very much. Shetty, can I ask your opinion on what will be the factors to watch? It's my first question. And the second is, what's your view on Belt and Road Initiative? Will it be the driver of recovery, growth, whatever, for the Middle East?
Yes, I mean, it will definitely provide some kind of impetus as far as the demand is concerned, but it depends on how much is the commitment that's there with different countries who are going to be partners in the Belt and Road Initiative. So that's number one. Number two, the great issue that we're facing now is slightly different. I mean, for example, in the Middle East, there is a huge movement of people. So there is a huge shortage right now in terms of the labor, in terms of the manpower required for various projects, for various operations. So that's an angle which we need to look at from a totally different viewpoint. I mean, perspective of demand and supply. The Middle East is greatly reliant on manpower from outside. So a lot of migrant people who are here have moved back on account of this COVID-19 situation. So now when operations are starting up, the biggest challenge that people are facing is availability of qualified and quality manpower and workforce. So that could be one major stumbling block as far as getting back to normalcy is concerned for a lot of infrastructure projects in the region. So that's a concern that we would have to look at very seriously. It would definitely have a huge impact on the demand as far as steel products are concerned in the region as well.
We have other questions coming through the Q&A box. We will not be able to ask all of them, unfortunately, because there's quite a lot of questions. We have one on China to continue the talk about the Chinese influence and its trends. What is your opinion? Why China is buying so much steel while having so huge inventories? So maybe I could address this question to Boris. The author didn't say who he wants to answer, unfortunately, but I think it's interesting to know what Boris thinks on that. Boris, can you comment, please?
Yeah, sure. First of all, not about China buying steel. China actually importing just minor volumes of steel, some quite, I would say, short list of products. But China is basically self-sufficient in steel, and China is definitely net exporter of steel. In terms of, but the exports, again, one day they've been at maximum close to 10 million ton a month, 120 million ton on annualized basis. Now we see more like a 6-7 million ton a month, so probably somewhere close to 80-90 million. But again, China is just more exporting metal-intensive products rather than pure steel. But in terms of inventories here, it's important to mention, and I have a chart on the first slide of the presentation. Chinese inventories, first of all, is difficult to estimate. Sometimes people talking about metal traders' inventories, and we have 5,000 to 6,000 metal traders in China, so no reliable statistics. Sometimes we talk about steel inventories on the mills, sometimes in warehouses in major cities. Shanghai, Beijing. But what I presented it more about major cities, key consuming areas like Shanghai, Beijing. And the reality is they're quite cyclical. And it's not only about steel, it's about aluminum, other metals. And they all the time growing in the first quarter around February, around Lunar New Year. Just because, as I mentioned, China allocates 75% of credit in the first quarter. So basically, we are going through a restocking process, and after that, we are going through the rest of the first half of the year through destocking process. Again, we've seen the certain spike in Chinese steel inventories in February. It's been above the level we've seen over the previous last 3-4 years. But again, it's not out of normal range. In 2013, 2014, in the beginning of last decade, we've seen the similar levels. And also we should mention that Chinese steel inventories, this restocking process accelerates year after year, because just the size of the Chinese steel industry and the economy overall is growing. So I would say, at least from my perspective, I don't see any enormous or out of range inventories in China. In terms of steel consumption, I see more potential in China because, as I said, the Western provinces hugely underinvested in terms of infrastructure.
Thank you. I remember in your presentation you said that the shift of steel exports of Russian steel into Asia meets certain headwinds like competition with local producers, lack of expertise and contacts, etc. I wanted to ask Victor whether he agrees with that, because we definitely see Russian steel exports, for instance, hot-rolled coils and billet going to Asia and to China specifically, to Vietnam. What do you think about it, Victor? Is it okay for Russian mills to go to Asian markets, or there are really some difficulties they are meeting there? What are the prospects of this route of exports?
As to China and its buying and export to China, in my opinion, China is buying steel or maybe semi-products to put pressure lower for iron ore market and to put pressure lower for some regional problems. Because in some places steel industry can be good, in some places bad, and these places will have to buy steel. For Russian steel industry, China and Southeast Asia is a quite challenging market, because in any case it's logistically quite far from us. Maybe for some mills not, but for the whole industry, yes. And all this time delays and big cost for logistics to supply steel to China and Southeast Asia, they made this market different. But just now, in my opinion, any steel company is looking for ways to survive. And if there is no huge demand in Europe because of this shock of demand for final products, people have to go to other market which can buy their production, and people have to sell at regions which are possible to sell. So this is, how to say, this is situation of present storming situation. And just now everybody is looking for chances to sell whatever he can to supply to market. That's all I can say about this. Thank you.
Our final question in today's webinar will go to Shetty. Shetty, what's your view on the geographical shifts, I would say, of trade flows, steel trade flows? So what do you see already or expect, maybe which routes, exports, imports will change in the future? And just adding to the previous question, I would say, new markets, new geographical focus, whatever?
Yeah, so what's happened is we saw last year that increasingly every region, every country is trying to protect its domestic market by imposing a lot of measures, anti-dumping and countervailing duties and all that. So that's going to be a lot of difficulty in the steel products being easily marketable in the international markets. So it's going to be very few of those areas which are still open to imports that the trade flows will realign itself. Now, surprisingly, as I said in my earlier discussion also, China has been importing a lot of steel because, and in spite of that, it's also shown a very high industrial output, especially in April after it had collapsed during the outbreak of the COVID-19. After that, it has shown a remarkable recovery sometime in late April. May onwards, they were showing a very good recovery. In fact, I think their crude production increased almost 13% just in the first half of May. So that's almost the highest since a long time. Now that actually hasn't resulted in oversupply. In fact, the inventory has quickly dropped, and the prices have increased there as well. So that's a positive sign as far as China is concerned. So a lot of Asian steel is moving there. For the first time ever, we saw Indian steel makers exporting huge volumes into China, here to unheard of. I mean, we have always seen China as an exporter of steel to these areas. So that's something that's happening. We would also see a lot of flows coming into certain developing areas in Africa and in the Middle East, because this is where, over a period of time, there's going to be more demand in terms of infrastructure development. So there will be a lot of these projects which have been put on hold for a long time coming back into action. It all depends on how long this COVID-19 situation will last. But definitely these are long-term projects which would still consume a lot of steel. So I would expect these markets which are up until now unprotected, but yes, things might change once the anti-dumping rules and regulations will come into place, if and when they come. But definitely up until then, these are markets which are still open for a lot of imports.
Thank you very much, Shetty. I would like to thank all our speakers for their presentations and views. I really appreciate that you managed to find time in your busy schedules and take part in our webinar. Really, many thanks go your way. I also thank all of our participants, ladies and gentlemen, for joining our event so actively, for your questions, your voting. Thank you very much, and I look forward to see you at Refinitiv events in future, both offline and virtual. And please, all of you, take care. Bye.